Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. A lot of growth stocks have been really hammered over the last couple of years as investors have shied away from paying too much for companies that aren't profitable or maybe have questionable growth prospects after the pandemic ends. But that's leaving investors some opportunities for companies that have a great long-term track record of growth. They're trading at pretty reasonable multiples right now. So I want to highlight three of those for you today: Taiwan Semiconductor, Block, and Wynn Resorts, and show exactly why I like all three stocks right now. My name is Travis Hoium. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my coverage and turn those notifications on so you know when a new video comes out. Now, the first company I want to highlight here is Taiwan Semiconductor, and this is the foundry that makes most of the chips that are in high-end devices today. Apple smartphones, NVIDIA chips are made by Taiwan Semiconductor. Even Intel is outsourcing some of its production to Taiwan Semiconductor. And you can see here just how impressive the company's growth is, both on the top line and the bottom line. This is not a company that is growing the top line but isn't able to turn those results into profits. They're just printing money right now. Net margin, so net income divided by revenue, is nearly 50% and has been consistently. Now, this is in large part because they have to invest billions of dollars to build the foundries that are producing those chips, so they have to generate a return. But they're obviously able to charge enough so that they can generate a high margin on the investment that they are making. The great thing for investors is the stock is only trading for about 14 times earnings. That's a pretty reasonable multiple, indicating that investors don't think that this kind of growth is going to continue, but I think it actually will. I think the growth that we've seen in artificial intelligence, which is probably going to require a new generation of chips, new custom chips from everybody from NVIDIA to Apple, that's going to result in a new phase of investment. And this is the leader. This is the company that's going to be benefiting from those kind of investments and those new designs more than anybody else. So Taiwan Semiconductor, ton of growth over the last decade, a lot of tailwinds, but I think that's something that will continue. And it's a great buy given the cheap multiple that investors are getting right now. The second one I want to highlight is Block. So this is the parent company of Square and the Cash App. That's its two primary businesses. This is the chart showing the revenue growth and then net income and operating cash flow. So not a lot of that money is flowing to the bottom line. And the revenue number is actually a little bit confusing because they include Bitcoin revenue in their revenue figure because they're actually taking Bitcoin onto the balance sheet and they're not just performing an exchange relationship the way that a lot of brokerages would or centralized exchanges would for cryptocurrencies. So a little bit different there. That's one of the biggest reasons that you see that drop in revenue since the end of 2022. Trading for Bitcoin has come down significantly as a result. But if you look at the long-term trend, this is still a growth company. It's increasing the number of transactions that are going through the Square ecosystem. That's the merchant ecosystem, where it's facilitating transactions for everything from food trucks to large businesses that are doing hundreds of millions of dollars in revenue. And then the Cash App is the consumer business. That's the app where you can go and transfer money to other people. There's a debit card involved. That's where you can buy Bitcoin. You can even buy stocks on that app as well. The vision there is to be the center of the individual's financial journey. And you combine those two businesses, and I like where the company is positioned. They're starting to integrate those two products a little bit more, make it easier to pay with the Cash App, which really takes away the intermediaries that are between the merchant and the customer that take typically a 2 to 3% fee. That's those credit card fees that go to both the credit card companies and banks that are facilitating those transactions. So that could potentially be a really valuable position to be. I would like to see more of this money flowing to the bottom line. So over the next couple of years, what Block really needs to do is manage its operating costs. I think as Silicon Valley in particular starts to think more about the bottom line, we are going to see that. But it has the growth engine behind it. And this is a very sticky business, especially on the merchant side of things. Companies aren't just going to change the merchant solution that they're using. So the Square app is going to be very valuable there. I just love this company. The branding, the long-term growth story is still intact. It's a little harder to make the value proposition given that the fact that they are generating a negative net income right now. But I still like the future long-term for this growth story. And the final company is Wynn Resorts. This is a casino company, has properties in Las Vegas, the Boston area, and then in Macau. And it's that last region that I really want to highlight here, because what we've seen during the pandemic is that there was a blip in revenue, particularly in Las Vegas, but revenue has soared back to record levels. Wynn and its competitors are generating far more revenue now than they were before the pandemic at those resorts. But Macau is still down in the 80 to 90% range. So that's why we see revenue down over the last few years. But the Chinese economy has started to open up. The zero COVID policy that has been over the country for the last 3 years has ended, and travel to Macau is starting to pick up. Macau's gaming revenue was just under $500 million in the month of March. That would actually be fairly low for pre-pandemic numbers, but that's the highest that it's been in 38 months. So we are starting to see a recovery in Macau already. I think that will continue throughout 2023. Expect that first quarter 2023 numbers from Wynn Resorts and its competitors in Macau to show tremendous growth there. And we could see multiple years of recovery. If Las Vegas is any indication, when people can't go out and get entertainment and gambling, when those properties do open up, they just flood back and spend even more than they did before. So that could mean that this becomes an absolute cash machine and a growth machine for Wynn Resorts. I really like what the future looks like there. And I think what we see now in negative net income is actually going to turn to a positive net income by the end of this year. And this is a real growth story long term. So the three stocks that I like from a growth perspective right now: Taiwan Semiconductor, Block, and Wynn Resorts. What do you think about those? Do you have any of them in your portfolio already? I'd love to hear your comments in the comments section below. Remember to subscribe to Rive Investing. Thanks everybody for watching. I'll see you again next time.